What's up, class? Welcome to Startup Funding 101 Sources of Capital series, and today we're talking about credit cards, lines of credit, and savings. I'm your teacher, Don Kavi, a serial entrepreneur and host of this channel where we talk about all things entrepreneurship and making your passion your life. If you're interested in these topics, make sure to hit the like, subscribe, and ring the bell to be the first to know when the next video drops. Let's get into it. In this series, we're going to explore several types of startup capital available for entrepreneurs and what situations they're best used for. Today, we're talking about credit cards, lines of credit, and savings. The textbook definition of a credit card is a payment card issued to users, cardholders, to enable the cardholder to pay a merchant for goods and services based on the cardholder's accrued debt. The card issued, usually by a bank, creates a revolving account and grants a line of credit to the cardholder, from which the cardholder can borrow money for payment to that merchant. In layman's terms, the credit card is a way you can spend money you don't have up to the card's limit. It's not advisable to spend anywhere near your limit, as it's going to impact your personal and business credit score. However, the interest on a credit card is calculated every monthly statement. So, depending on when you make the purchase, and if you fully pay your bill every month, it's like having a 30-day interest-free loan. But remember, you have to pay off the entire balance. So what's the difference between a credit card and a line of credit? A line of credit is a flexible loan from a bank, similar to a credit card, that offers you a limited amount of funds. These funds can be drawn on and accessed as needed. It works just like cash, moving money into your checking account. You may log in and transfer $1,000 to $10,000 in your account and use it immediately. The trick is, with the line of credit, the bank will start charging you interest on a daily basis. There's no 30-day free loan like with a credit card. Lines of credit are common in the business world to help with working capital and cash flow issues. They can be based on previous cash flow to determine how much a bank will approve you for. They can be secured upon assets like your home as well. A home equity line of credit is secured on your house and will likely have a lower interest rate than a general business line of credit because the risk is lower. Many banks offer free lines of credit, and honestly, they are nice backups to have as a business owner because you just never know what might happen. Potentially, you could have a big client paying late on an invoice or an accident that happens. There are a lot of scenarios where you might use your line of credit. You just have to have it in place before the need arises. As with commercial loans, you're very likely going to have to personally guarantee that your business cards or business lines of credit. The bank always wants a fallback to repay the money, and that's going to be you personally. I also want to talk to you about one very obvious form of startup funding in this video, and that's savings. By a long shot, your own bank account is the most common way an entrepreneur gets going. Putting in your own money, having skin in the game, is what makes you an entrepreneur. It should be your first gut instinct to look into your own bank account when starting your business. I'm not saying you should risk everything, but what I am saying is that if you're going to ask an investor or a bank or anyone else to put in their money and back you, you should be already doing it with your own wallet. To sum up this video, it makes sense for a business owner to use credit cards for the typical monthly expenses to pay their bills, but with the idea that they will pay off the entire balance every month. Lines of credit are an important tool to have in place for unexpected cash flow issues that are all too common for small business owners. And never forget that your own savings will likely be the #1 source of your startup funds. If you want to learn more about startup funding, I've written a free PDF linked in the description below. In the document, you'll find case studies of startup companies and how they funded their launch. That's it for now. Let's keep cranking on your startup and making your passion your life. Ciao!